Welcome back. A big topic for Canadian and particularly Canadian investors these days is the future of the capital gains tax increase and the fact that while it has not been passed into law by way of legislation, the CRA, continues to charge at the higher rate, the higher inclusion rate, despite the fact, as we just said, that that legislation has not been passed into law, and the chaos in Ottawa underscores that situation. Let's bring in, for an expert view, Dan Daviau, Chairman and Chief Executive Officer at Canaccord Genuity. Dan, thanks a lot for joining us. What's your take on this, and what are your clients saying on this? This is a big topic for investors.
Well, obviously, the capital gains inclusion rate is a big topic, but it really goes to the broader issues of the uncertainty in the capital markets. And I don't think history is going to be kind to Justin Trudeau and the Liberal Party, putting us in the chaos we're in. Because when you make an investment decision, you need some certainty. You need to understand what those bases are. So whether it's the trade negotiations that are going on now, capital gains inclusion rates, government policies around various of our industries, I think it's a very, very tough market. And you can see it. The Canadian dollar's now at less than 70 cents, I think you just reported. That's the lowest it's been in 20 years. We haven't seen those levels since pre-NAFTA. So, there's a lot of uncertainty in the market, and I think I think you're witnessing that. And there's no obvious answers. I don't have the answer, you don't have the answer. I don't think anyone really has the answer. So, to a certain degree, though, I think it's, you look out there and you'd almost prefer a rudderless boat right now than the guy that was captaining the boat before steer you right towards the rocks. You got a better chance. And the dollar reflects that. The dollar actually rallied when Trudeau resigned.
Yeah. On the capital gains inclusion rate, what are your clients telling you? Investors would like this to be dialed back, obviously. They would like this to have died on the order paper, so to speak. Are they frustrated that the CRA is continuing to charge it at the higher level?
I think they are, but that's been the CRA's policy in the past, as you know. So we'll have to see what happens with that inclusion rate. What's really important, though, is what you tax. The government needs to tax. The government needs revenue. We have social programs. We have infrastructure. I get the fact that we need revenue. But taxing everything the same is not wise. There's certain sectors that are very important for our Canadian economy, our growth sectors, our technology sectors, our healthcare sectors, our sustainability sectors. Those are very important. The fact that someone's cottage may get taxed a little higher, that's less important for GDP growth, for the country's growth. So I think there's got to be an intelligent view on what we ultimately do with the capital gains tax. I don't think it's just a wholesale, let's not do it. I think the new government will have some real decisions to make.
More broadly, the companies that you deal with every day, how do they view Canada as a place to invest their capital right now?
Well, I think it's difficult now. With uncertainty, no one's going to make an investment in this uncertainty. That's obvious. You don't know what your tariffs are going to be. You don't know what your costs are going to be of manufacturing. You don't know a lot of things right now, and you see that. So you've got Canadian companies selling Canadian dollars and buying U.S. dollars to invest in the U.S. and build factories. You've got foreign investors who aren't going to be committing Canadian dollars and committing investments right in this market right now. Now, eventually, the dollar will go low enough, and quite frankly, exporting will become cheap enough. It ultimately gets borne out by the Canadian population and the workers here because they're going to earn less in U.S. dollar terms. But at the end of the day, we'll get to a place where this is a good place to invest. I think the uncertainty right now will be tough for the next 6 months. And given that we're not going to have a new political leader for 4 to 6 months, it'll be very, very difficult.
You don't want to advocate for specific politicians, but what kind of policy prescriptions would you like to see in a new federal government?
Yeah, I'll be careful not to do that. One thing I'd say is we do have the advantage of more or less understanding where the Conservatives stand from an electoral perspective. I'd like to see what ultimately some of the Liberal leaders will have. Will it be more of the same, or will it be something changed and something different? Hopefully the latter. But at the end of the day, we have to support a growth economy in Canada. Our GDP per capita is terrible. These tariffs are going to reduce it by another $2,000 per person. That's $80 billion in Canada. That's a massive number. And that's your wealth, my wealth. That's money that goes to the government. That's infrastructure. That's healthcare. That's everything. You can't have that. So the new government has to invest in growth industries right now. And I've said this point in the past, but Right now, you look at the top companies in Canada, the top 15 companies in Canada, their average age is over 100 years. 5 of them are our Canadian banks. We have some very protected industries in Canada still. From foreign competition, our airlines, our telcos, our banks, our agriculture. These are all, there's a cost of all of that to our economy. So I think the new government really needs to focus on supporting growth economies. Tech, only 8% of the TSX is technology. It's 30% in the U.S.
Yeah.
Less than 1% of the TSX is healthcare. That's 8% in the U.S. There needs to be fundamental shifts to the Canadian economy.
Those are huge gaps to close, or even huge gaps to narrow. What kind of time? What will it take to build a more robust tech and healthcare sector?
Years and years, and it starts with attracting capital. Well, obviously, I'm in the capital business, but it starts with attracting capital. And the government's got to have. It's not only regulation and policy, but incentives to invest in certain of these sectors. It's got to happen. It's the only way it's going to grow. And I think if it happens, I sound very negative on Canada. I'm not. Very proud Canadian, and I think the country can do exceptionally well. Like, we've got great resources and a great talent pool, and it's a great pre-crime and pre-everything. It was a great place to bring up a family. But at the end of the day, we need to be able to attract foreign capital and domestic capital to invest here in the companies that don't need to be here, the tech companies and the healthcare companies. They don't have to be in Canada. Banks have to be in Canada. Airlines have to be in Canada. Yeah. Telcos, by definition, have to be in Canada. Support the industries that don't have to be here, and that's going to ultimately grow our economy, and that's what our new political leadership needs to do.
Pierre Poilievre, in a recent interview, put a great deal of emphasis on unleashing Canada's energy potential, things like facilitating the export of liquefied natural gas in a more aggressive way, facilitating the sale of oil in a more aggressive way. Do you agree?
Sure, it's a phenomenal resource. We should be doing that, but at the end of the day, the leader that we have has a problem. It's got to negotiate with the U.S. Like, when you look at our resource sector and you increase, if you look at the Canadian Business Council, and what they say is our exports with a 25% tariff of resources and oil and gas will go down by 60%. To the U.S., our exports to the U.S. Those are massive numbers. So we're going to need a strong leader to be able to negotiate with the U.S. and understand not only what's important to Canada, but what's very important to the U.S. And it's the defense and some of those protected sectors, some of those protected industries, non-competitive industries, are not going to be protected going forward, and they shouldn't be, quite frankly.
One thing your company helps other companies with is mergers and acquisitions. Yes. What's the climate look like in Canada right now?
It's good. Again, subject to these are broad statements and these apply for a long period of time, but generally good. You've got financing, generally rates coming down. You've got access to capital improving. You've got stock prices improving. You got record private equity, balances out there to be invested in. All of those things bode well for an M&A market. But you got to realize, if somebody wants to buy somebody today, and they walk into our office and suggest that, they're not actually buying that company for 9 months. It takes a long time. So there's a long lead time on that, and so we see that, and we think it's very strong.